Okay. So we begin day three of our trading bootcamp. This is Ace, and this is day three of our bootcamp. So day one we learned about higher highs, higher lows, lower highs. Day two we learned about trending markets and ranging markets. What a trend is, what a ranging market is. We learned that we have an uptrend and we have a downtrend. Uptrend being a bullish trend and downtrend being a bearish trend. So this is day three and we are going to learn about break of structure. But before we get into the break of structure, I need to illustrate what we are supposed to be looking out for. So I was supposed to do this earlier in day one, but I forgot. So in trading, we basically have candles. What's a candle? There are small things you see on your screen. They are called candles. And what do candles have? What are traits of candles? Candles have wicks. I hear you. There are two types of candle on the chart, which is a bearish candle and a bullish candle. Please stay with me. We have a bearish candle and a bullish candle. A bearish candle. No, no. Bearish candle is a candle that closes above its opening. So in trading, we have opening and closing of a candle. Candle starts out something like this. You see, it's something like this, just a straight line. When the candle comes down like this, you hear me? When the candle comes down, this is its opening. Stay with me. This is its opening. When it comes below its opening and closes, it's a bearish candle. When I say bearish candle, it means the candle is going down. You see, what do we see? This is the opening of the candle. When it closes below its opening, it is a bearish candle. Now, maybe it didn't close exactly from when it opened. Like sometimes the candle moves up before it moves down and closes. Once it moved up and came back down, it will leave a trace. You see, it will leave a trace. That trace is called a wick. You get me? It's called a wick. Okay, you get me? So using this knowledge, we can clearly define what a bullish candle is. A bullish candle is a candle that closes above its opening. So you can move down before it moves up. When it does that, it leaves a trace. That trace is called a wick. Okay. That trace is called a wick. You get me? So an uptrend consists of bullish candles. You get me? Let me use this so you can be faster. Now, uptrend basically consists of bullish candles. So let's give them some wicks. So what do we see? It's an uptrend. It consists of bullish candles, and what can we say? A downtrend consists of the opposites, which are bearish candles. Please stay with me because there's another knowledge we need before we can get the break of structure. This is a downtrend and this is an uptrend. So we basically know what candles are. Candles are either bullish or bearish. When the candle is bullish, it closes above its opening. When it's bearish, it closes below its opening. Now on the chart, the most basic colors are red and green. Now the bearish candles are the red candles and the bullish candles are the green candles. But on my chart, I've customized my chart, making it simpler for me because I have difficulty reading primary colors. They are too bright for my eyes. You get that when you start trading. So mine is violet and white or ash. So my violet is my bullish candle and my white or ash is my bearish candle. You get me? You get me? Okay. Now let's go to the main topic of the day, that is break of structure. So what's the break of structure? So we have a trend in the market, we are trending down. We are trending down. And suddenly we move up. What caused the market to move from a downtrend? So if you see, we're obviously in a downtrend, which was here. We're obviously in a downtrend, but all of a sudden we pushed into an uptrend. So what caused it? So a break of structure is simply when a candle closes above, you see, closes above a swing low or high, or a significant high or low. Why is it significant? Because in this trend we had a lower low, we had a lower high, we had a lower low, we had a lower high, we had a lower low. So what were we expecting? We were expecting a lower high, something around this area, and then we reverse back into the trend. What's happened? What happened? We ended up making a higher high. Why is it a higher high? Because why is it a higher high? Because it is above, sorry, because it closed above the previous lower high. So we ended up violating the trend. That's what a break of structure simply means. A candle closure above a significant high or low. And what are our significant highs and lows? They are our lower lows, lower highs, higher lows. Okay. Now this is when there's a shift in the trend. What if you are continuing the trend? You still have break of structures in the continuation of a trend. Now let me show you that one. It's simpler. I should have begun with that one. Sorry. I'm a bit nervous. That's why I keep on mixing up the difficulty levels. Now what's a break of structure in the continuation of a trend? Let me delete all this. So let's still be in a downtrend. Okay. And what do we see? We see low, we see high, we see low, we see high. But one thing you should know, in order to confirm a trend is continuing or a continuation of a trend, it's a trend to the downside, which is a bearish trend, you have to see a candlestick close below this previous low for it to continue to be a downtrend. You have to see a candlestick close below this low. Get me? Or you get to go and get to the chart. You see, same applies for uptrends. works, the trend to still be an uptrend. It's the candlestick. The candle must close above the previous high. In these ones, we had a low. We broke above this previous high. We got a low. Broke above this previous high. You get me? So it's literally a break to the upside or to the downside. Okay, to make this video short, we just go into the chart straight. So let's first begin with a continuation break of structure. So let's take this area. Now we have a downtrend. How is it a downtrend? Because it has a series of lower highs and lower low. Lower highs and lower low, lower highs and lower lows. Sorry, I mean you get me. Lower high, lower low, lower high, lower low. Now, using the concept of break of structure, how do we identify this trend is still continuing to a downtrend? We have a break above the previous low, so I'm going to mark out all the lows with trend lines. There is a low. When marking out the lows, please, at the tip of the wick, you put the lows at the tip of the wick, not the body of the wick. You get me? The tip of the wick. So that's a low. That's a low. That's a low. Now, what do we see? For it to continue being a downtrend, we break above the previous low, which is we had a high, we had a low. Why this? For it to continue being a downtrend, we must break below this previous low. Okay, and how did we break it? We broke it with this candle, this particular candle. That particular candle. Oh shit. Let's use this one. What do we do? This was our previous low. What do we do? This candlestick. You see the one that line, I'm putting line. This one close below that low. Okay, this candlestick close below this low. It's closed here. So what do? We confirm it's a downtrend. And what the market do once up came down. Now what are we expecting again? We're expecting a closure below this low. Expecting a closure below this low. And what does it? This candle breaks and delay this. Now this candle breaks below this low, creating this new low again. And what do we do? What does market do? It continues breaks. So that's how it's like. in a continuation trend. Now where we are shifting, the market does not be wait. The market was supposed to go down like this, but this candle, this candle broke above this previous high. It closed here, so it what do you see? Invalidated the trend. You see, what's the break of structure? It's a closure above or below a significant high or low. So what did we do? We broke and what happened? We continued. That's the most basic explanation I can get for you. You break and continue. With all the explanation I've done, I think that's going to be sufficient enough. What we do, we break, we break. Uh, high, lower high, lower low, then boom, we broke that lower high. So what does the market do? It basically tells us that boom, the trend has been validated and then we are shifting trends. So when the trend is invalidated, like we shift trends from bullish to bearish or from bearish to bullish. So this example we went from bearish to bullish. So what do we look out for? This time, so I kind of nervous. A low, a significant low, which is a higher low. We have a higher high. Then we have a higher low. We have a lower high. Yeah, that's what we'll be needing for this. So what first happened? What first happened over this area? It's a higher low, which we trending was higher high, higher low, higher high. So we're expecting a higher low. But what did we get? We got this candle over here, this white candle over here. What did it do? It's closed below this one, this higher low. You see, it closed below this higher low. You get me? What did it do? This is our higher low. It must not close below this or the trend will change. It must not close below this or the trend will change. What we do, we close below it. And what happened? The trend changed. The trend changed. Now what are some of the points? This is a higher low because it broke above the previous low, which is the lower high or higher low. It broke below it. So this is our higher low. And what do we get? A lower high. A lower high because it didn't break above here. It just came up. And what did it do? When a lower high comes, what do we get? A lower low. Lower high, lower low, lower high, lower low. So break of structure simply means when a candle closes below or above a significant point, which in this case was this higher low. You book the higher low and boom, change. You book the higher low and you change. Okay. So this is basically what I'm going to teach for today. I didn't basically do much preparation for this class. So I apologize for any inconsistency and anything caused. Please, if you don't understand, please notify me and I'll do well to explain it further. This is day 3. Thank you, girl. If you understand, please react to these videos because I'm putting in a lot of effort and time. So let me know. Thank you for your time and everything. So this is now catching the next one.